Let's take a look now at a petty cash problem example together. I have included this Excel document in document sharing for you, so if you want to follow along as we go, you could write this in or type it in Excel. And I've also included a completed version of this, so you have the answer key to this as well. So let's take a look at the problem here. It says on September 1st, Tops Taste Salad Dressings creates a petty cash fund with an in-press balance of $300. During September, Michael Martell, the fund custodian, signs the following petty cash tickets. Now remember, those petty cash tickets need to have the proper receipts attached to them, so we know that those expenses or assets were either incurred or purchased. So we have tickets 101 through 105. We have office supplies, cab fare for executive, delivery of package across town, business dinner, and merchandise inventory. And it tells us on September 30th, prior to replenishment, the fund contains these tickets plus cash of $70. The accounts affected by petty cash payments are as follows: office supplies, travel expense, delivery expense, entertainment expense, and merchandise inventory. So for each of the petty cash tickets that we have, one of those accounts are going to be impacted by that in our journal entries. So journalize all required entries to create the fund and replenish it, and include explanations, and then we need to make the October 1st entry to increase the fund balance to $350. Okay, so let's take a look at this. We'll just use 2016 as the year since they didn't give us one. And with the first entry we have to do is on September 1st, which is to create and establish the fund for petty cash. Now remember, you only debit petty cash when you're going to establish the fund or you're going to increase the value of the fund. So obviously we will use petty cash as our debit here. And they're establishing it for $300. And then we'll credit and put cash of $300 into a separate safe drawer or box, whatever way we're kind of storing the cash for the fund. Now we move on to replenishing the fund. This was to establish the fund. So on 9/30 we will have to replenish it. Now it tells us what accounts that we have that are impacted, but really the first thing I want to do all the time is the calculation that shows what credit to cash is going to have to be made here. So the way we get that is we take the value of the fund and we subtract out the cash in the drawer, let's make that a little larger for us there. Okay, and then that will give us our credit to cash. So in this case the value of the fund was $300. It told us right here that the fund contains tickets plus cash of $70, so we'll subtract out the $70 here, and we'll have to see that we have to credit cash for $230 when we replenish the fund. Okay, so let's go ahead now and identify the assets and expenses that we either bought or incurred. So the office supplies would be an asset that we'd have to debit, so office supplies is debited for $30. The cab fare for executive would fall in the travel expense account. So we would debit travel expense for $25. Then the delivery of package across town would fall into the delivery expense category. So we have $20 for that. The business dinner would be an entertainment expense. That was for $45. And then the merchandise inventory would be an actual asset that we're buying, so we would just debit merchandise inventory. And that would be for $120. Now, what we have to do here now is we have to see how much money we have actually receipts or tickets for. So let's just real quick, we'll erase this in a minute, but if we look at this, we see that in essence we have receipts or tickets for $240. That's the amount of all those things added up there. Now we really have to only replace in cash $230. So in this case, notice that we are actually having to replace less than we actually thought we spent. So in this case, we are over by $10. Okay. So here's how we have to deal with that. Remember, the entry to replenish the fund always includes a credit to cash, like we figured out here. The value of the fund minus the cash in the drawer is our credit to cash. I'm going to go ahead and credit that. So cash gets credited for $230. Now obviously the debits do not equal credits because we figured out that the debits were totaling $240 and we only have to put back $230. So we would use an account called cash over or short to make up the difference. So now we can see that this entry properly replenishes the petty cash fund. And when you think of the cash over or short account, it really can have a debit or credit balance. In this case, because we were over, it's like we found $10 somewhere. So it's sort of like a miscellaneous revenue. If we were short and we had money that we couldn't account for because we didn't have enough receipts, then we'd have to debit it. If it had a debit balance and the cash was on the debit side as far as being short, then it would be like a miscellaneous expense. So that entry there replenished the petty cash fund. Now it also wants us to make the October 1st entry to increase the fund balance to $350. Okay, very simple entry here. Remember, our value of our fund is already at $300. So on 10/1, we have to debit petty cash again. We don't want to debit it for $350 because we're already at $300. So we only have to debit it for $50. And then we simply credit cash for $50. Now our fund balance is at $350 and we're ready for the expenses and or assets for this accounting period when it comes to petty cash.